ladies and gentlemen. Good to see you all. Excuse me. Good to see you all. Hope you're doing well, and officially a happy Halloween. So, going to do a quick session this morning. It is indeed obviously Halloween today, and we've got a lot of family activities. Going to do a bit of family time today. All the kids are off half term, obviously. Haven't managed to really spend any time with them this week, so today is the day for it. I'm going to do a quick recap of what happened yesterday. Obviously, do a little bit of a highlights feature on the UK budget, have a look at the rest of the fundamental catalysts, and then wrap things up from there. I'm not going to go through, offer any more trade ideas. I'm not trading myself, so therefore no trade ideas are going to be shoved out the door, as I won't be taking them, and so therefore won't be able to verify the entries and everything, at the point of time it's taking place and stuff. So that will be that. So UK budget yesterday, guys. I don't think there was anything that was too much of a surprise over what we were really expecting. A couple of things, definitely, granted, came as a bit of a surprise, but I think the general sentiment is fear at the moment, in terms of UK market sentiment. It's enough said there, isn't it? I don't know if you guys managed to catch the whole thing. We caught quite a big portion of it, and then dipped out. But I tell you, her opening speech was fantastic. It was very, very good. And to be honest with you, I thought, fair play. Very strong opening. But there are some things down the line, especially, I think the thing on everyone's head is the corporate gains on the sale value of any personal asset over £6,000, and the tax associated now to that, the increase in stamp duty and other things. There's a lot of sort of mid-band individuals who are really struggling to make ends meet, that's going to affect also. So many. So it'd be very interesting to see how that pans out. But it was pretty harsh. Yeah, it was. I'd say it was pretty harsh in general. What's even more harsh than that bloody thing is the sheer amount of losses incurred on the FX side of things. Now, I actually have cleared them all down, but luckily for us, we have a direct track record to all trading performance. Would you look at that? So let me open up the track. Okay, there we go. So awesome. Yeah, that works amazing. Okay, so what we could do, check out the track record and see where we're at. So far, I've been studying this all morning. So far, the week is actually looking okay. And what's happened here is we've been supported by stock trading. It is as simple as that. The FX... Bless me. Sorry, guys, I knew that was coming. Oh my God, bless me again. So, as it stands at the moment, the FX space has really been knocking us around. So as we can see here, just having a cruise through, it's been a really rough show. From Monday the 28th, so there, I don't know if we can fit all those trades on screen. Yes, we can, just fit them all on. So that's this week's list of positions. So a very high volume of trading has been occurring, considering we didn't even get off to the start with the FX space until yesterday, I want to say. But yeah, there's been a high volume of trading. Now, out of all of these trades, if we go through 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. We've got 19 trades that have been taken this week. Out of those 19 trades, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades that are losers, leaving 9 that are winners. So we have a negative win versus loss ratio this week. Not crazily, but it is negative. And I would say that almost every single FX trade that we've taken, with a very, very limited amount of commodity trading as well. I mean, we've only taken one gold trade, which was a loser. They've all been losers. And the stock market is really where we've managed to put a little bit of that back in on that front. So it's really kept the fund afloat, and wherever we've been getting slapped about by the FX space. Now, compound interest is doing the fund wonders at the moment, of course. At the moment, we're currently up 19.75% for this month. Weekly return is at around, this week's return is at 3.1%, just under. But yeah, that's not too bad at all. Now, we're actually surpassing September's gains, even though September we were looking at 25% or something, or 27%. I can't remember what it was now. So we are looking at quite a jump down in the monthly return, and yet a real nice increase in the financial return, in the actual monetary value of that, which is interesting to see. And that's just the magic of compound interest. And this should, hopefully, as long as I don't absolutely stack it, or something fundamentally breaks with the way that we trade, this should just continue going on and on and on. Now, soon enough, team, you will see a big spike down. And I'm giving you a heads up here ahead of time, because you will see, if you watch the track record, a big dip. And the big dip is because I'm making my first withdrawal. We're coming up to that season, that lovely season that we all know and cannot wait for every year in January. Starts with a capital T. And I'm moving things around a little bit due to that. So you will see a big withdrawal coming through soon. And that's just what it is. So, yeah. But so that's where we are. Sorry, guys, I'm sort of dribbling on here on the microphone, aren't I? I'm just kind of evaluating the situation. It has been a bit of a rough week. It's been good in terms of the financial return and the return on account, but the win-loss ratios is depressing at the moment. It's pretty bloody rough. Really edging closer, ever so closer, day by day to that 50-50 win-loss ratio. I mean, to be fair, when I was years and years and years ago testing the over year 6, it averaged out at like a 48 to a 50 win-loss ratio, and I'm just relying purely on my own ability to call the market to keep that 50 above 55 ideally afloat. But realistically, I'm thinking now, is it actually possible? Or is the law of large numbers really coming to get me? So we'll wait and see. But yeah, so that's where we are at the moment. It's been a pretty bloody rough week. It's been choppy. A lot of losses incurred because of our beautiful risk strategy. We are still seeing gains at the moment. I mean, day on day is pretty bloody good. I mean, yesterday was Wednesday. We had so many losses. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, 9. Is that right? 1, 2, 3, 4, 5, 6, 7, 8. 8 losses yesterday. And 1, 2, 3, 4, 5. 5 wins. So 5 wins and 8 losses amongst yesterday's trading, which is, I mean, that's quite a large number of trades, isn't it? So yeah, we'll have to see how things pan out for the rest of the week. We'll have to see how things pan out for the rest of the week. So let's go back to trading view then. have a little flash over here, see what's occurring. Let me just change the window again. There we go. So in terms of what's going on this morning, I mean, I sent out a potential trade idea in the UK FTSE, which seems to have completely disappeared. Regardless of it disappearing, though, the trade has been invalidated. We broke down and not up. We did have a breaker structure trade idea placed in somewhere up here for a move up to around 81.40 or so. But the market did dip down, and that's where it's trading at the moment. So there won't be any further European stock trading today. The DAX had a bit of a dip down and then a rally back, but it's not really showing too much of anything at all. In terms of the US markets at the moment, I mean, there's not really much point even talking about these guys at the moment because of the nature of the time of day that we're trading them, but they're not doing anything. In terms of the econ calendar and what you guys have got to look out for today, Thursday is a bit of a busy day today. Obviously, we have the inflation rate for the EU. That's the annual inflation rate, and it's also core PCE day for the US. So if you recall, Thursday, Friday were the two biggest days of the week for the fundamental side of things. So we do have that inflation rate that's coming out in about 47 minutes time. And then we later on today have the core PCE price index for the US. Now this one will likely be a market mover. So please do be aware of the core PCE, what that the impact, you know, if it's a jump to 0.3 from a 0.1 figure, the price index will be impacting things like the US 30 Dow Jones, the NAS 100 and S&P will move as a result of that as well, of course. But yeah, it's important to just be aware that it's there. Also, trading US dollar today is probably going to be a little bit of a high risk territory thing. So I'd steer clear of that one as well, temporarily. And yeah, that's it really. European Union 47 minutes time, US this afternoon at 12:30, and then apart from that, it's pretty plain sailing. In terms of what's going on in equities at the moment, equities are all looking absolutely crushed. Apart from, I would say, the tech and finance services, which are having a bit of a mixed bounce back. We are looking at some continuation of these. I mean, Google 5.9%. We've also got a big one down here, this one here, which is Cadence Design Systems. I mean, that one's had a whopping move up today. Started the day trading at 22.52.77, and yeah, it's jumping up at the moment quite significantly. So that's what, a 16% gain on that one. We're still looking at electronic technology and health tech being slapped around pretty badly. Utilities completely crushed. Energy minerals crushed. Consumer non-durables, doing real bad. Retail is actually down as well. Amazon's gained a couple of percent, but in general, the market sentiment is quite bad for that one. If we look at the tech stocks at the moment, the NAS 100, it's a bit of a mixed bag. I would say probably more balanced than anything though, because of Google and Meta. We've also got Cadence, which I just highlighted to you a moment ago. Tesla's doing well, 18.62%. It's probably the front runner to the US tech stocks basket at the moment. Going down, have a quick look. UK FTSE. So UK FTSE at the moment, yeah, not doing great. It's getting slapped. Obviously, the UK budget's going to have a bit of a say-so on this as well. You're probably going to see the UK FTSE come back from something like the UK budget. I would imagine that will bring the UK FTSE back over a period of time. Looking at the rest of things then, onto the FX scanner. FX scans at the moment, if we look starting from the bottom to the top, CAD yen is at the moment in the largest loss at minus 0.65% down. Apart from that, we've got a couple of 0.5% down, but generally speaking, guys, it's pretty neutral. We're not really seeing too much of anything for a significant portion of the basket here. If we actually start at the top, we've got CAD yen, or the yen actually. It's the yen in general. The yen's having a bit of a pump at the moment, so that's that one. Yen pairs, you can see against the pound, euro, Swiss, NZD, Oz, and CAD, all doing quite well against them all. But apart from that, if we remove the yen, the rest of the basket's looking really, really timid at the moment. Not too much market movement going on whatsoever. So it's just a pretty big pretty big period of consolidation across the whole markets. The labeled FX pairs that we can see so far here in the asset basket are pairs that are currently either live or haven't triggered yet and are still pending. So for example, this is the Aussie CAD short. We came down to liquidity a couple of times, failed to break and close below it down to our major TP. And it's just at break even. It continues to run. So we're just going to have to wait and see where that one goes. I mean, at this moment in time, folks, it doesn't look good. It doesn't look great. So we'll have to wait and see about that one. UK Brent as well did really, really well. Came up to, pretty close to a stone's throw away from TP. And actually rejected the top of this area here. So it's made, at this stage, no progression towards closing its gap at all. None whatsoever. And now we're trading down at around the 50% point of the trade idea. So we'll still have to hold fire on that one, see where that one goes. Aussie dollar still failed to actually trigger at this moment in time here. So we're just waiting for that pending order to trigger and see where we go. I'm not going to remove that pending order by any stretch. It's still a, I think it's still an absolutely fine trade idea to consider at this stage. And then we've got the Euro Wars. And the Euro Wars is a really far shot away from triggering, so I'm not even sure about this one. It just seems pointless to leave it in the market, but at the same time, why not? I guess, maybe we can remove that one tomorrow. I'll leave it in there for one more day. And we'll see where we go for it tomorrow. So that's pretty much it, guys. I don't really have anything more to comment on at this stage. Sorry it's not been an action-packed session. I think it's been a really mixed week, and regardless of the fund actually still being supported by some relatively decent risk yield stock trades, it has been pretty choppy out there. It has been pretty mixed up, and I think rather than try and dig in deep to start generating a load of other trading interest whilst I'm not in the office, it just doesn't seem like the right call to make at this stage. So I think having a bit of a disconnect today and a little bit of a step back and then hitting the markets tomorrow for the final day of the week, I think is probably the best course of action. In terms of the fundamentals today, it is pretty much one of the highlight days of the week as well, which means there's going to be mines out there that you need to consider. The core PCE, the European CPI, out shortly. So there's a couple of things there you need to watch out for. Obviously yesterday with the UK budget as well, still going to be having its bleed out effect on the markets. Sentiment's going to be all over the place. If you take a quick look over here as well, if we just visit our VIX, the VIX volatility index at the moment is looking really, not like really high in the grand scheme of things, but we have had a pretty big gap up here at the moment. Now, we do like volatility, guys. Don't get me wrong, we do like it. But when it comes to things like, and this is a measurement of the S&P 500, so it's not broad market spectrum VIX, measurement of every asset class, but it does really put a good gauge, I guess you can say, where volatility is. If we look at every single trade idea in review that we took over the course of yesterday and stuff like that, all of these trade ideas, like I said in the chat, they all hit target. Every single one of them hit their TPs. Almost all of them. I say almost all of them hit their TPs eventually. Like this CAD yen, for example. This is such a beautiful short. But when we got our short, well, the first opportunity was here, and it came back up there. The second opportunity, if you would have taken it, I didn't put a second one out, but if you did, you would have still had a loss. This would have taken us out. That would have been like a directly on the stop loss move and then come down. And even if you put, let's say for example, if you had a breaker structure point in there and you would have taken the trade in here, you still would have been stopped out. So all of these trade ideas in the moment, and this CAD yen's the perfect highlighted example of what's going on here. All of these trade ideas that we're looking at the moment, they're all going to target, but they're all knocking us out first. And we have to deal with these wild and sporadic random moments of volatility where the market jumps in a given direction with no real factor at play, no real fundamental reason at play here. But it's just the nature of where the markets are at the moment. Things are fearful. And when investor capital is fearful, we have sporadic trading, stuff like that. It is a reflection of the world's psychology in monetary form. That's what the markets are. A living and breathing entity of what people are thinking on the other side of the screen. So best to have a little bit of a step back, a little bit of a rest day, and then we'll hit it off again tomorrow. That's my take on it. And if you do want to trade, then focus purely on the US stocks this afternoon. Maybe we'll get a good move after the core PCE, depending on what the core PCE index information tells us. At the moment, we are looking at a 0.3% uptick, 0.2% uptick from the prior figure. If that one does take place, then that's going to be representative of relatively sticky inflationary problems continuing. And, we may well see the stocks take a further dip down as a result. Core PCE being bullish like this will be relatively good for the United States dollar, which is one thing. And we'll also have to monitor the personal income and personal spend as well. At the moment, we have seen a gradual decline. The trend is down, relatively speaking, apart from a couple of outliers. If we look at personal spend here, personal spend's been kind of all over the place here. A couple of down, a few down months, few up months. So we're just going to have to wait and see what that one's suggesting as well. But if personal income is remaining low, but personal spend is remaining high, then that's not a good sign for the economy either. So a couple of things to consider there. Right, team, that's going to be it from me, I think. So I'm going to wish you a good day today. Hope it all goes well. Just heed my advice. It has been a bit of a choppy week. As I said yesterday, lots of losses incurred on the FX space, a lot of volatility. I think it's probably best to stick to the stock markets, I would say, today, and let's just see where tomorrow goes. I will be back, obviously, bright and early in the morning tomorrow, and then we'll set ourselves up with perhaps a couple of intraday trades. I will definitely be trading the NFP event tomorrow, as I always do, so stay tuned for that one, and I will catch you then. So take care, guys, have a good one, and I'll see you later. Thanks a lot. Bye-bye.